Hello, everybody. Welcome to NFA Live. Another great day in the cryptoverse. I am joined, as always, by my friend Guy from Coin Bureau. Guy, how you doing? How's Dubai?
I'm good, thanks, Rob. Dubai is starting to heat up a little bit.
Sorry,
Getting
man.
getting towards the 40s. Getting sweaty.
And everybody at home, that's 40 Celsius, which is hotter than hell.
Yes.
And then, of course, Ben in his nice new decorations, nice new office. This is like, I think, the third week. It's looking good, man. Looking good. How you doing?
Pretty good. How about you?
Not too bad. So today we got a couple of questions just to go over. But if you're not subscribed to Guy and Nick over at Coin Bureau, you've got a plethora of options. It's not just Coin Bureau. It's more Coin Bureau. Coin Bureau Trading, Coin Bureau Espanol, one of my favorites, Coin Bureau South Asia, and Coin Bureau. I don't know what this is, by Future. And of course, Ben, who is crushing it these days with the AI-generated thumbnails, looking very nice, very good. Definitely check him out. He's got a couple of things to say about Bitcoin dominance. And also, out of all these different videos you just saw, I can only recommend one for you to watch. And that is this great interview with Ben and his chief marketing officer, Dana Howell. And I will tell you, I've never seen Ben smile so much in my life as opposed to off camera when we talk about how altcoins are getting crushed. Besides those times, I've never seen him smile and laugh this much. So I linked this in the description.
What's that? The wallet?
Yeah. So how old is that wallet?
I don't even know. I honestly don't know.
Oh, man, it was funny. It was good times, good times. So definitely check out those, link for Coin Bureau and Ben, but definitely check that video out. So gentlemen, today we've got some things to go over. And the first one is this, the S&P 500. Now, it's down let me pull this up, 7% and 2% over a time frame. Here we go. And this is over a month. It's down 7%. Last day or so, well, they're resetting, but it was negative 2.32%. And we've seen Bitcoin and some altcoins be somewhat resilient over time. Now, this has actually changed. And every time we talk about resilience, I think I'm jinxing it, unfortunately. It goes the opposite way. But Bitcoin over a 7-day and a 30-day time frame is up 2.6%. And usually when we see this in the traditional markets, it's the opposite. The TradFi gets a sneeze, and Bitcoin, entire altcoins go through the coronavirus. But you're going to see that Bitcoin's been resilient. Ethereum is still sucking. XRP 3.1, but down 10 for the 30 days. Solana up 4%, 13% and 7%, pretty good. Tron for some reason 12%. So the question I have is a very simple one. What's going on? Is this a decoupling? And what do you expect to happen in the next, quarter or so? Is this going to keep decoupling and we'll see more resilience or not? Guy, take this question.
Okay. I mean, I think there are two main reasons why Bitcoin is holding up well when compared to stocks. I mean, we'll get to the question of decoupling in a bit. But I think really there are two main reasons why it's performing well against stocks. I think the first is that when it comes to Bitcoin, and I Bitcoin only, I don't mean alts in any way here, but I think investors generally understand the HODL narrative, if you like, with Bitcoin. They get the digital gold aspect of it. And I think the fact, they get the idea that this is something that you buy and hold as part of your portfolio, if you like, as a kind of long-term hedge against inflation. And bear in mind, however this current situation turns out, and whatever the time frame, what it'll eventually lead to is money printing and further devaluation of national currencies. And I think investors are generally aware of that, so they're prepared to hold Bitcoin for the long term. And just as an adjunct to that point, I think we've seen it go quite a way above $100,000. Fairly recently. And I think it seems to be that the general consensus view, certainly within the crypto community, if you like, is that we will revisit those levels and probably go higher at some point in the future. I think it's quite difficult to find, unless you ask the Peter Schiffs of this world. I think it's quite difficult to find anyone, certainly in crypto, who is kind of bearish in the longer term on Bitcoin. I'm sure they're out, and I'm sure they've got good reasons for being bearish. But the general consensus seems to be that, you know, we'll revisit north of 100K, and possibly, you know, I mean, we're some very smart people who've obviously arrived at these price predictions through careful research. You know, there are some people are saying 1 million, some people are saying 250,000, some people are saying 200,000. Whatever it is, the consensus seems to be it's going higher in the longer term. So that's the first part of it. People understand what Bitcoin is, and that if you hold it for the long term, you'll probably come out all right. I think. And then when it comes to sort of comparing it to stocks as well, I think the important thing here is that Bitcoin isn't valued in the same way that you value stocks. It's not valued by the same metrics. You know, Bitcoin doesn't have earnings, for instance, which is what you might value, you know, especially some of these Magnificent Seven tech stocks, which are basically, you know, most of the stock market these days. We don't value BTC by those metrics. And I think, you know, what if the kind of tariffs and everything that have been rocking the markets recently have told us one thing, it's that I think the tech stocks especially, but I think stocks in general were kind of overvalued before Liberation Day came along. And you know, we've had a correction, and you know, stocks haven't, although you know they did have a big pump when Trump you know, announced that 90-day pause. You know, that correction is still very much in evidence, which shows, I think, that they were overvalued beforehand. So yeah, Bitcoin isn't judged by the same metrics as stocks, and I think that's the other important thing to bear in mind.
Very true. Very true. And then there's a couple of questions, just to follow up real quick, and just to make sure that everybody's on the same page. Prototype says, when you say longer term, do you mean years or months?
I guess I mean both, really. I mean, I personally believe that Bitcoin will be higher than it is now by the end of the year, because I think economic conditions will have improved. I think uncertainty, I hope, will have died down. I think there's a chance that we'll have had rate cuts from the Fed, an end to QT, maybe not QE. That might be a little over optimistic, but I certainly expect Bitcoin to go higher in the next few months, and almost certainly in the next few years.
Got it. Well, good play. Good play. I appreciate that. Ben, what do you got for us? Where are we as far as decoupling, and is that even a reality?
It's not a reality, in my opinion.
Here we go.
Yeah, here we go.
But it's true. But it's true.
All right. Well, can you show my screen real quick?
Yep. I could. Oh, here we go.
There we are. All right. Yeah. So I don't really think the market, you know, Bitcoin is decoupling. I mean, I think it's basically just operating like a risk asset. But I think Bitcoin has a way of sort of ripping the Band-Aid off quicker than the stock market does. And maybe that's because you have a lot of people who have all this passive investing through like 401ks and whatnot that Bitcoin's not really going to have. And so there's this narrative right now that, you know, that Bitcoin hasn't dropped the same way the stock market has. But really, I mean, Bitcoin's dropped more than the stock market. It's just that we're used to the volatility. It doesn't feel like anything to us, right? Like Bitcoin dropped 32%, right? I mean, 32%, it feels like nothing, right? For an investor in crypto, like that's just a Tuesday. You could wake up and the markets are down 30% and you wouldn't be that surprised. But the S&P, it feels so much worse because it's, you know, it's much bigger market cap. But look at that. I mean, the S&P is only down 21%. So there is some reality that, you know, Bitcoin dropped more, but I guess the counterpoint is that Bitcoin went up like 500% during a time when the S&P basically just doubled. So the fact that Bitcoin is only down 30% after outperforming the S&P 500 for so long might be might be a bigger topic. But if you look at the market cap of Bitcoin divided by the S&P 500, you can actually see that it did top out, at least in the short term, literally the day that President Trump took office. That's the day where Bitcoin kind of topped out against the S&P for a little while. And you can see that over the last month or couple of months, it has been trending up. But this is what I mean. I think Bitcoin has a way of ripping the Band-Aid off, right? And it'll get that drop, right? I mean, you can see that it dropped. It had already dropped down to basically where it ultimately went to by late February.
Yeah.
Whereas the S&P did not even start dropping really until late February. So I think there was weakness in Bitcoin when we actually saw strength in stocks. And now we're seeing the opposite. Now we're seeing strength in Bitcoin while we've seen weakness in stocks. So I don't really think over a multi-month time frame, I don't really think that this is decoupling. I think in the short term, right, on like a few day basis or a few week basis, you could say, yeah, like it decoupled. But as I mentioned, I mean, a lot of times when people start saying that they've decoupled, usually they couple back, right? So yeah, I mean, I don't really buy into that narrative as much, because I mean, it ultimately seems to me like, and if you were to even look at, say, like the NASDAQ, right? If you looked at the NASDAQ, you could argue that the Bitcoin is just operating as a more volatile version of the NASDAQ, right? Like if you put Bitcoin on a log scale here, right? Like it's not, those charts look very similar to each other, right? I mean, yes, there's times where they deviate a little bit, but they're still generally on the same trajectory, right? So for me, I don't really, I mean, in the short term, you could argue that they've decoupled slightly, but I think over a multi-month time frame, there's not really a decoupling going on.
Yeah, and this is what I like about this show, is because I get to hear opinions from Guy, and he gives me sentiment like long term, and what's going on there, and I can see the same thing. We know Bitcoin so far has a 100% recovery rate, and S&P 500 also as well. Then I get to listen to Ben as he destroys my cherry picking of data of 1 day and 30 days, and shows me that, you know, in the short term, it's not looking so great, maybe like 2 or 3 weeks or so. But I think it all comes down to this. I think we're all in agreement here that in the long term, things are looking good. In the short term, it's anybody's guess. And right now there's so much volatility, and I don't really want to talk about tariffs, but that's the reality of the situation. So I appreciate both of those responses. It helps me out. So that'll lead me to our next question, which is, we talk about Bitcoin quite a bit because we know it's going to be number one. It's going to be number one for quite some time. I don't see a flippening happening maybe in my lifetime, but who knows? But what does a crypto project have to be or do to have some kind of staying power in the markets? Because it seems like we've got our pumped out funds and the nonsense tokens that are just getting, you know, crushed right now after, you know, releasing 10,000 or so per day. And now it seems like there's only like a handful of ones that are going to be winners. Maybe that's the truth. But what do you think it's going to take for those alts to be a winner? And these are just for the questions for the altcoin investors, such as myself. So, Ben, you were just talking, so have at it.
Yeah, I mean, I think one way to be successful as a crypto project is to not have a token.
That could be it. That could be it.
I generally do prefer exchanges that don't have their own native tokens. In general, like it's one of those things where like they're, you know, solving a problem that doesn't really exist and saying like, oh, here's a token, and now you can get lower fees if you use this token. But they could have just made it so that you got lower fees by trading in anything else, but they created the problem, right? And then found a solution for it.
Right.
So I'm not really that into exchange tokens because I don't really think they need to exist. I think that by far Bitcoin is not even close. I mean, it's by far the most useful in my opinion, and I think that that's really been proven over the last few years. The dominance of Bitcoin has just gone up, right? I mean, it's, you know, don't take my word for it, just take the word of the market, right? And the market has been pretty clear what it values, and that has been Bitcoin over essentially everything else. I think that there can be value in decentralized finance, that sort of stuff. I know a lot of people are kind of against the whole proof of stake stuff, and you know, I don't. In my personal opinion about proof of stake is that I prefer proof of work, right? I prefer Bitcoin by far over the proof of stake networks. But I also don't even know if they've really been given a chance at this point, because a lot of the, again, and I've said this before, right? A lot of the interest rates that they provide are lower than what you can get in a money market, a T-bill, or a CD, or comparable, right? And so a lot of investors are not going to take on the risk of crypto asset in, macroeconomic uncertainty times like that we're in right now, when they can get the same return risk-free in a T-bill,
Right.
And I know people have a problem with sort of but again, like if the T-bill, if that's not risk-free, then we got bigger problems going on at that point than the definition of what even risk-free is. So I would say that I do think there can be value there. I just think that people don't value it now because there's other things to worry about, and when you're in a long tightening cycle, and QT just keeps going on, and you have all this uncertainty with all the stuff going on at the political level as well. I think people are just going to focus on other things, right? It doesn't mean that they don't have value. I always thought that decentralized finance was actually a really cool part of cryptocurrency and stuff. But doesn't really seem like recently people have cared as much about that sector. But again, I think it's mostly an artifact of the macro, not because it's not actually valuable. So, perhaps as eventually rates come down and people become less worried about, the business cycle, sort of the end of the business cycle, we'll see interest come back to those sectors. And remember, a lot of these crypto projects that that continue to bleed against Bitcoin, well, most of them will never stop bleeding against Bitcoin, is the truth. But the ones that will have sort of a recovery because they do provide value, last cycle they didn't even recover until after QT ended, and again, that hasn't even happened yet. So I guess there's always hope. But remember, over the long haul, Bitcoin is by far the best crypto asset out there. If it survives, it doesn't mean that everything else will survive. But if everything else survives, it's only because Bitcoin survived.
Yeah, and I got to tell you, this is why my portfolio is pushing even higher of 70% plus on Bitcoin. Guy, same question. Because with altcoins, this is more suited to your stance and the channels that you have. But what do you think? What does it take?
It's a tricky one, because I do agree with what Ben says when it comes to the idea of, do so many of these projects need a token? And that's a question that I think more and more people are starting to ask. And I think the reason for that is sort of multifaceted. I think partly we've seen, so many promising projects launch with a token and it's done nothing. And as Ben has said, everything is bleeding against Bitcoin at the moment, and most of it will continue to do that. And so I think, there's a lot of disillusionment with this idea of, projects having their own token, and really, what is the utility? What is the utility of a governance token, for instance? Like, this idea of governance is great. It's nice for people to think that by owning a token, they can have a say in how the protocol itself, how it's run or whatever. But that hasn't really delivered on its promises. Governance is it's not a case of one token, one vote, but if it is, it's often just whales voting. Look at what happened recently with Crypto.com and CRO. Crypto.com took the decision to just relaunch, if you like, reach what was it, 70 billion tokens?
Yeah.
Now these have supposedly been burned.
Mm-hmm.
And I think that was a good, and that ties into to what Ben is saying about exchange tokens and stuff. This idea, like, well, what's the point of it? What's the point of it? And what's the point of governance if a project can just go, yeah, actually we are going to inject those 70 billion tokens back into the chart, back into the market. I don't care what you guys say. I think Ben sort of touches on something. I guess the elephant in the room here, if you like, is stable coins, because you have Bitcoin, and we all know what the value proposition of that is. That's strong, and that is why it's so successful. But now, and it's obviously important to remember that Bitcoin's original use case was going to be peer-to-peer payments, digital cash. That's what it says at the very start of the white paper. That is no longer the case. But stablecoins have kind of come along and taken the place of, or are starting to fill this niche of value transfer rather than digital gold, rather than a hedge against inflation. And I guess the advantage that stablecoins have is that, for one, they're obviously stable, but they're pegged to the US. Well, they're mostly stable. There are mostly examples where that's not been the case. But they're pegged to, by and large, I think it's staggering, but like still 99.9% of stablecoins. I think it's literally that. 99.9% of stablecoins are US dollar, are pegged to the dollar. Tether's Circle has EURC, a euro stablecoin. I think obviously because of MICA in the EU, it's just nowhere. Other stablecoins are being talked about. I think there's a lot of talk about a yen, Japanese yen pegged stablecoin. But the fact is, almost all of them are pegged to the dollar. Why? Because most people around the world, including obviously everyone in the United States, that's what people want. People want the dollar. And stablecoins are now, not only are they enabling these very quick, fast, and cheap transfers of value, acting as this sort of digital cash in place of Bitcoin or in place of bank transfers or whatever it is. But they're also giving people access to a currency. Okay, it's a fiat currency and it's devaluing over time and it will eventually go to zero. But at the moment, it's going to be the last one standing. And who wouldn't take US dollars over Nigerian naira or Turkish lira or Argentine pesos? So yeah, it's tricky when you talk about altcoins and what is the use of what are the uses of so many of these tokens, where if you want to transfer value, you have the means to do it with a stable coin. So yeah, I think that's a difficult question that the industry is going to have to answer over the coming years. Is there a need for a token? I'll give you an example. I've been thinking recently about a crypto project that I would like to see. I would love it for their away. Do you know when you're scrolling through your Google News feed, and you come across an article that you want to read, and you click on it, and it's paywalled, right?
Yeah.
You come across that all the time. And okay, sometimes you get to read like a few free ones, and then they'll try and sell you a subscription. Sometimes it's paywalled, and if you want to read it, you have to buy a subscription. Eventually you're going to have to pay to read it, and 99% of the time that's via a subscription. I would love if there was a crypto project that let you pay a set amount, say a few cents, to read an individual article, because I don't want to take it out. So I've got half a dozen subscriptions to various magazines and news sites and things like that. I don't want to take out another $50 subscription or whatever, but I do want to read this article, and I will pay money to read it, like within reason. I'm not going to pay $10 or something, but I might pay 50 cents. I might pay $1 or something to read something that looks very interesting. Anyhow, I thought this would make for a great crypto project. And I was sort of thinking about it, and I was like, well, okay, so how would the token work and stuff? And the more I thought about it, I was like, you wouldn't need a token for that. You do it with a stable coin. Let's say you build it on Solana or a similarly fast crypto, and you just let people pay with USDT or USDC on Solana or whatever it is. Why would you have a project token? And then the more I thought about it, it was like, well, the reason you would have a project token is so when you went to VCs to get money for it, you could say, yes, there's a token. You can have however many billions of them straight off the bat, locked for 2 months or whatever. And that, I think, that unfortunately is the use case of a lot of tokens. I think it's just it's to issue sort of equity to VCs, which then surprise gets dumped on retail, the first chance a lot of them get. So yeah, I think this is an awkward question. That said, for instance, layer ones, I mentioned Solana there. There are plenty of other examples, whatever layer one this crypto project might run on. There's there's something to be said that like the native token of an L1 can be used to pay for transaction fees and whatever, and obviously for staking and things like that. If you want to help secure the network. So I think there's a case for L1 tokens. Obviously, there are too many L1s. That's right. That's a fact. But yeah, it's tricky because I think in the last cycle and the cycle before, there was a lot of talk about this project is a decentralized version of this. This is a decentralized alternative to Uber. This is a decentralized alternative to Airbnb, whatever it is, and this token mechanism is going to help you, the retail investor, own a part of this platform. And that's really cool. This idea of Web3, this idea of taking value away from these big monopolies like Facebook or Meta or whatever, and giving users an actual stake. And obviously, unfortunately, that sails pretty close to the wind when it comes to securities laws, as Gary Gensler pointed out. But that model is also now broken because I think of the way these things are funded. The fact that VCs have been buying up these things early, and there just isn't anything in it for retail for so many of these projects. I don't think that's the case for every single altcoin, but yeah, I think stablecoins have made value transfer very quick, easy, and cheap, and that's what people want to do on a day-to-day basis. You have Bitcoin, which we know and love because it's Bitcoin and it's digital gold. What's the use for a lot of these other tokens? Enriching VCs is a lot of it, unfortunately.
Guy, I'm gonna change your name to Butter because you're on a roll. I got to tell you, that was first of all, that was a bad joke, but second of all, that was really good, and it really did piggyback off to what Ben was talking about, which was, why do we have a token for an exchange? Why don't you just reduce the actual prices for different trades that you're doing instead of having a token? The only reason that there's a token is so you can fleece your customers. That's essentially what's happening. Guy, I like your idea. And I was thinking, it's almost like if you could use that for news articles or even like videos, like Netflix just increased their price from it was like $19, now it's $29. And I was thinking to myself, I use this like probably twice a month to watch a video. Wouldn't it be great if you could just like go someplace and just for a reasonable amount, just purchase a series or whatever else? And you could do that, but I mean, it's just an off-put question. Anyhow, I like where things are going. That was a good one. And let's keep moving on here. This one, Gary Gensler is back. And I guess this will be kind of like piggybacking off of what you said. It was him, and he was talking about, let me see if I can pull this up. It was kind of weird that he was talking, but essentially he was saying that Bitcoin is the only cryptocurrency or digital asset out there. And he pretty much just said he's essentially a Bitcoin maximalist. And he said 99%, and he said maybe 100% of all altcoins are scams. Now, there was a question we had 3 weeks ago. Ben asked this on his channel, and he said, which enemy of crypto could come back and be like a redeemed hero? And my answer was, of course, Gary Gensler. And here he is. And now we've got some of the Bitcoin maximalists cheering him. But the question I have is, first of all, is he right that, and I think this is what Guy said, is he right that it really is just Bitcoin only and the rest of it is just trash? Or is there something out there that actually does utility? This will be a fast question because we pretty much answered this. But Guy, just real quick, which ones have utility besides stable coins?
Yeah, it's a good question. I think he's got a point. It's too much, though. It goes too far to say that all of these things are scams. There are definitely a lot of scams out there, but I think the vast majority, or certainly the ones that have endured for a few years, I think these have been genuine attempts to build things, to build a new financial system, to build new platforms that work in a different way. And so I really think like the word scam gets thrown around far too much, but yeah, there are definitely questions around the utility of them as well. I think, for instance, going back to L1s, like it is not easy to build an L1. It is not, it's not like spinning up a token on pump.fun, or even just spinning up an ERC20 token on Ethereum, or an SPL token on Solana, or whatever it is. Like, so I think, you know, there is a case for these L1s. Like I say, I think there's too many of them, but there is a case for them. They can work. They, you know, a programmable L1, which is what Ethereum, you know, that's why Ethereum came into being, because Vitalik and, you know, others sort of around that time, they loved Bitcoin. They saw how amazing it was, but the drawback was it's very difficult to build on. And that's still the case. Like, it's getting easier, but it is still the case. So there is definitely a case for smart contract compatible cryptos, because, you know, stuff can be like DeFi, that like Ben was talking about, is a great example. You can do stuff on these things. The question is, again, like, do all these things need a token? And also, I think when it comes to DeFi, a lot of it is just usability. You know, people are still crypto's user interface isn't great. DeFi is still quite tricky to use for most people. But I don't think it's fair for Gary Gensler to say, you know, all of these things apart from Bitcoin are scams. That's nonsense. But yes, there are plenty of scams. But yet again, this is what the SEC did wrong under Gary Gensler. They just went, everything's a scam. And it's like, well, you know, that's not true. Like, even if you don't like something, even if you don't believe in something, you can't just call it a scam, you know, even if it doesn't necessarily work. Like, you can't. There are Bitcoin maxis out there who call Ethereum a scam. It's like, no, that's, you know, that's bullshit. No one would work that hard on a scam. Do you know what I mean? It's like, you know, it's a genuine attempt to build a new way of doing things. It might work, it might not, but it's not a scam. And the problem is, like, if you label everything a scam, then the actual scams get away with it, because, you know, they sail under the radar, whilst everyone's, you know, sort of tearing a strip off the rest of the altcoin market. So yeah, there are genuine attempts to do things, and I think some of them will succeed, but there will probably be a fairly bloody reckoning in the end, where there will be a few L1s standing and the rest will be like, do you remember that? Do you remember that? Do you remember that? Yeah, it was tough. And the one last thing I'll say on it is, I wonder if there's a market on Polymarket for Gary Gensler to speak at Bitcoin 2026. I think this year's conference in Las Vegas probably a bit too soon, but who's going to take me up? Gary Gensler 2026, Bitcoin Nashville or Miami or Las Vegas or wherever it happens to be.
First of all, if that actually happened, he was at Bitcoin conference this year in Las Vegas in May, I would have to see if Ben could get him a direct invite to the CRYPTOVERSE party, so everybody could just go up to him and bombard him with questions. That'd be great. So to finish this up, Ben, I'm not going to ask you about the altcoin thing, but or what you think is actually going to be great. But let's talk about stablecoins real quick, because Paolo Arduino, the CEO of Tether, said that he wants to put Tether into essentially a layer 2, which would be Lightning Network, for a stablecoin, for Tether stablecoin. And I thought, if that's the case, that would be like the Bitcoin maximalist's dream, right? We can start to actually use this for payments, and then Bitcoin could have its day for everything. If that happened, and we had Tether on Bitcoin, which sounds like it's going to actually go through, what does that mean for Bitcoin dominance? And I'm just taking a look at the chart here. With stables, Bitcoin dominance today is 63%. That's pretty amazing. And without stables, 69%. So where do you think we stand there?
I mean, the wind is blowing in that direction of Bitcoin dominance higher. It's hard to say exactly where. I think that 66% is kind of like that next main target for Bitcoin dominance. Remember, a lot of the stuff happening right now, while it's easy to assign a narrative to why it's happening, this is still exactly what happened last cycle during the monetary policy tightening phase of the cycle. I mean, it's all exactly the same thing. The only thing that's different is that it's taking longer this cycle. So the narrative has had a lot longer to run this cycle than it did last cycle. But yeah, I mean, I think Bitcoin dominance is going to go higher. 66% seems like a good short-term target. I don't really think I'm going to be satisfied with Bitcoin dominance having a top until I see all Bitcoin pairs at 0.25, right at their range lows. At that point, and if QT is over, then maybe Bitcoin dominance has topped out. But until that time, I think it's more important to just know which way the wind is blowing than to know where the wind's going to stop blowing, or, like, you know, the exact timing of when it's going to stop. Because in 2022, really in 2021 when this Bitcoin dominance uptrend began, it was really hard to know exactly how long it would last. It's hard to know exactly where it's going to top out. But if all you knew was that Bitcoin dominance was going to go higher until QT ended, like that's all you really needed to know. And you've been on the right side of it. So I think I don't know exactly where dominance will top out, but I think it's going to go higher until the macro conditions allow for it to top out. And I think you have to have QT to end. You might have to have QE start, but I don't really know that that's necessary. I think you need to see altcoins down on their Bitcoin pairs about 30%, another 30%. After those things happen, then maybe Bitcoin dominance will top out. Until then, I think it'll go higher.
Hey, before we move on to the last question, is there a way in the workbench or just in the regular ones to overlay Bitcoin dominance with QT?
Yeah, just go to the workbench and type in Bitcoin dominance, and then look up, the balance sheet of the Fed.
So if people aren't aware of this is Ben's website, links in the description, and you can do any kind of charting that you really want to and pull things over, not just the ones that are prearranged, but things you can do. So, okay, wait. What am I adding again? Bitcoin dominance?
Yeah.
What's that?
No, you need to, no, you're on asset. So change that to Bitcoin.
Okay.
Now click on Bitcoin. Now go to the thing below it and change that to dominance. Nope. Just go to the price. Yeah, there. And then change that. Scroll down, dominance. With or without stable coins. It's your choice.
Let's go crazy. Without. That's what I was doing wrong. Okay. And then?
Here I think you want to go to, and then metric, type in, what is it? Just start typing in like Federal Reserve or something. Hopefully it'll come up.
Debt, surplus.
Fed total assets. So
there we are.
Now add that.
Yeah.
And then and you can see how last cycle, I mean, Bitcoin dominance didn't start going down until after QT ended. I mean, look at where QT ended, and that's basically around the spot that Bitcoin dominance finally topped out. It did wick above that level like a year and a half later, but for the most part, dominance topped when QT ended.
Okay. So that's just something for you. Everybody who wants to be a chartologist, have fun with that one. All right. So the last question, that was good information. Thank you, Ben. But the last question is, as such, this is the time that we kind of let our imaginations run wild. Imagine a crypto-themed reality show where failed altcoin founders compete to rebuild their reputation in some type of TV show. Think of it like Survivor or Squid Game for altcoin failed projects. Who's the first contestant you would cast, and what challenge would you give to them? Ben, let's start with you.
I'd probably cast Do Kwon.
Yes, that'd be great.
And I mean, it's kind of, I didn't know if I should take it literal or not, like the question of like a blockchain jungle. But basically what I came up with was the game would be called the Stablecoin Survivor. And so we would drop Do Kwon off into a blockchain jungle, and we'd basically have like a mock economy and a lot of like NPC traders just played by actors essentially. And he has to design a new stable coin using limited resources, like, just whatever he can find there. And the catch here is that the stable coin is going to be is basically, it wants to maintain its peg, but the thing that backs the main currency of the jungle is coconuts. And so he has to create a stable coin that is pegged to another currency that is backed by coconuts, not gold or anything like that. That is backed by coconuts. And then about every 3 to 6 months, all the rival contestants come out and they trigger a market crash by launching fake coconuts onto the market. And Do Kwon's objective would be to maintain a peg of no lower than 0.95 throughout those sort of manipulated market crashes. And he would also have to gain adoption by 50% of the NPCs. And if he can do that, then he's proven he can rebuild and maybe actually launch a stablecoin in a proper way.
That's pretty good. That's pretty good, because to maintain a peg of the stablecoin, you need coconuts. First of all, if you're just catching this at the very end of the show, you're like, what the hell are they talking about? This is the part where we just kind of get off the mainstream. But I like that, the stable coins, the coconuts, to see him running around getting the coconuts. I guess it's better than prison, but I like that one. Okay, Guy. So what do you got? A contestant of a failed altcoin, put them into like some kind of Survivor show, and to make them redeem themselves. How would you do it?
Yeah, I had a couple of ideas on this. Just quickly, yeah, I really hope some people tuned in just at that moment to hear about a stable coin being backed by coconuts and just went, "Oh God, what's this? What's this project there? Is this real?" Yeah, I thought Do Kwon as well. I didn't. I thought he could have a bit more. It wasn't such an elaborate challenge. I thought Do Kwon, he just has to run a Twitter account for a week without being a dick to anyone.
Yeah, that would be very tough.
You're just setting him up for failure.
Yeah, exactly. Why do you do that, Guy? That's so unfair. I
didn't say it was going to be easy, Ben. I didn't. But yeah, if he calls, as soon as he calls anyone poor or anything like that, he I don't know, he has to eat insects or whatever it is they do in these reality show challenges. So I think that would be pretty difficult for Do Kwon. Now I know EOS isn't necessarily a failed crypto project, as in it's still going.
Hey Rob, just pull up while Guy's talking. If you could just discreetly pull up the EOS Bitcoin valuation as he's talking.
This is brutal. This is brutal.
So, do you guys know the film Brewster's Millions? Have you heard of that?
Yes. That was an old one, Guy. Old one.
So the quick synopsis is, if I remember rightly, Eddie Murphy's character inherits like a serious amount of money, like millions and millions and millions, and he can only keep it or something if he spends it all.
It was Richard Pryor, but yes.
Oh, it was Richard Pryor. Oh, right.
Yeah.
Yes. Okay. It's even older than I thought. So Richard Pryor, he inherits all this money, but he has to spend it. That's the caveat. And he can't spend it on like assets, or he can't buy houses with it and stuff. So he just has to find a way to spend these millions of dollars on just stuff. And like the whole premise of the film is that he finds, all these funny and elaborate ways to do it. I think the founders of EOS just have to do that with the $4 billion that they raised in that ICO, but they have to do it in the jungle. So that, they've got to go and buy a lot of coconuts, or whatever it is, a lot of coconut-backed stable coins. So that was one idea. And then I just thought, like, the myth of Sisyphus? It's one of the Greek myths. Sisyphus. Yeah, condemned to push a rock uphill forever. Yes. And then as soon as it gets to the top of the hill, it rolls down. And a Sisyphean task. I just think, like, crypto founders, you could have a version of that where they just have to conduct an airdrop campaign that doesn't piss off or enrage or alienate any members of their community at all. They basically have to try and keep everyone happy with an airdrop campaign. And that's, they're obviously just sentenced to do that forever, because that's Sisyphean. It's impossible. That
is impossible. That is almost like Atlas holding up the world. It's never going to actually happen.
Yeah.
So, gents, those are pretty good responses. I personally would like to see, it would be like Hunger Games, but it would only have two people. It would be Sam Bankman-Fried and Alex Mashinsky, and they would battle it out and duke it, and then one would be eliminated, which, of course, would be actually good for the entire community. So that's what I would say, and I like both your answers. So let's get into a little Q&A, and then we'll get out of here maybe a little early. So here's some of the questions, and this is one from I watched this as we were talking about when Ben was speaking about if there was correlation. No tariffs on Bitcoin. Why would it get murdered like NVIDIA? And I think that's one of the reasons why we see. Didn't really want to get into tariffs, but it does make a lot of sense. It seems like NVIDIA is hanging by the thread of a Trump tweet, and what's going to happen in the background. So I think maybe some people are looking at Bitcoin as like a safe haven. And I hate to say that because then tomorrow it'll drop by like, who knows, 30% and be like, Rob was wrong. But it does make you think about it. Anyhow, any thoughts on this?
I think, I think with a lot of US stocks, there has been a real kind of backlash against the US, hasn't there? Whether that's out of sort of genuine fear of like, I just don't know whether US assets are safe to hold, or whether it's kind of ideological in purpose. There have been people selling out of US assets, and so a lot of US stocks will have been hurt by particularly foreign investors selling out. Bitcoin obviously doesn't have a country. Bitcoin is a neutral asset, so it's when you combine that with the fact that I think Bitcoin holders tend to sort of have stronger hands than stockholders for reasons that we discussed earlier. I think as the comment says, no tariffs on Bitcoin. It's ostensibly a neutral asset.
Yeah, it's well said. How about this one? I think it's a little bit convoluted, but the reason why Bitcoin is more downside, maybe upside, is because we need to flush out the alt market. Ben, when you just did a video recently, this might have been a premium one, not for sure, but you talked about levels of where the altcoin market probably need to go. Of course, we're not talking about your altcoin. We're just talking about altcoin. Where is that?
Down.
How low are we going?
Yeah, let me just share my screen really quick, and I can show you at least what I was referring to. It's the same thing I've shared for like the last 3 years. It's just the altcoin investors this cycle are a lot more stubborn than all prior cycles, so we're dragging this out for a lot longer. So I basically am just under the assumption that altcoins will bleed until they go down to where the altcoin market cap is about 25% of Bitcoin's market cap. Currently, they're about 36% of Bitcoin's market cap. And this pattern has actually been playing out this year. It's almost exactly the same as last year, where you have a high in December, a lower high in January, and then a lower high in March. And then you have sort of like a low in April, a low in June, and then a low in November. Same thing happened this year. A high in December, a lower high in January, a lower high in March. Maybe this right here is going to be our April low. Then we'll have a June low. Then we'll have a November low. And by the way, November of 2017 is when all Bitcoin pairs were at 0.25. So yeah, I know it sucks, and I know a lot of people have watched other people's altcoins bleed against Bitcoin. But I gotta say, like the most likely outcome for altcoins, whether we like it or not, right? Doesn't really matter what we want or what anyone wants, right? The most likely outcome, as far as I'm concerned, is they're going to keep bleeding against Bitcoin. And I'm not willing to really change my mind on that until either all Bitcoin pairs are down here or the Fed ends quantitative tightening. And slowing QT down, the wind is still blowing in the wrong direction for altcoins, even if they slow it down. Because even last year in 2024, they slowed it down. They made the announcement in May, and then shortly after making the announcement, alt Bitcoin pairs collapsed. Just like over here, they made the announcement. Everyone's like, oh, alt season, QT's slowing down. And then sure enough, alt Bitcoin pairs just start collapsing again. So yeah, like I think alts are going to keep bleeding against Bitcoin, and I don't really think there's a damn thing anyone can do about it.
You know what? There's two people right now listening to us, and the one individual is like stressed out and looking at that and going, damn it, that's going to be a bad thing because my alts are going to have big fat bags and that's it. And if that is you, it happens. It happened to every single one of us here. It happened to Ben. That's why he talks so much about altcoin or Bitcoin dominance. And it happened to Guy because he's been in longer than us. So if you're thinking that way, you probably did a little bit too much investing. Sorry, it happens. However, there's a second person, and that's me. And I look at that and go, man, I hope Ben is right on this one. I hope altcoins keep going down. Because as time goes on, you can start to accumulate and do the things. And then I guess that would lead me to the next question, which is, where the heck did it go? I'm going to ask both of you guys this, the portfolio now, because we should, we update. Is Ben all in on Bitcoin, but not just all in on Bitcoin, but also Guy, have you changed your portfolio at all? So Ben, what do you got with this one? We'll start with Ben and go to Guy.
my crypto portfolio is mostly Bitcoin. I do have some ETH. It's mostly Bitcoin. I do have a position in Ethereum, especially with it finally having gone home and ETH Bitcoin getting annihilated. There's always a chance Ethereum is a relic and it doesn't recover, which is why, you know, my crypto portfolio is still going to be way more majority Bitcoin than any other cryptocurrency. I have to say, if Ethereum is a relic, who's not going to be a Bitcoin maxi at that point, right? I mean, like at that point, then I don't really know how you look at the market any other way. But I would say, I also think, I said this back in January, February, and March as well, and I'll say it again now. Like, I think it makes sense to have, you know, about 30% in US dollars. Not because you're going to get rich by holding US dollars, but it could be a hedge in case we're in some type of like left translated cycle and we just see lower highs from here. There's always a chance that happens. Maybe you could say there's like a 1/3 chance it happens. And if there's a 1/3 chance it happens, maybe have about 1/3 cash in case it does. And, you know, and if Bitcoin is able to put in a new all-time high and do well this summer, then you could reduce that cash position as you see fit. But, you know, I said that back in January because we talked about this, right? We talked about, you know, the market pricing in perfection on January 20th, right? With the strategic Bitcoin reserve being priced in and the and Gary Gensler resigning and deregulation, you know, promises. And then again, we got meme coin launches by everyone, including presidents. And we just haven't, again, it's all about when it feels like the market is under the perfect conditions. Normally that's where you find at least local tops, right? So basically that's what I did. And then I was able, and then by doing that, then when the market did drop, my cash percentage actually went up because everything else went down. And so then I was able to use that to DCA into various assets and still keep my percentage at around 30% cash, just because the market's dropped, right? So that's my view. I mean, that way you're kind of hedged for, you know, if you have a right translated cycle and we just kind of get the normal run-of-the-mill cycle where, as Guy says, like the price of Bitcoin just goes higher by the end of the year, you're prepared for that because you're mostly just Bitcoin anyways. If the degens finally get an alt season call right, well, maybe you got some Ethereum in case that happens. And if it's a left translated cycle and we're going down for the next 2 years, then hey, at least you got something to buy up the assets with. So I mean, it's kind of like you know, you can, I don't know, it helps me sleep at night and rather than worry so much about what actually transpires. Because I mean, look, I think if we are going into that and it's down for a little while, it probably would ultimately just make Bitcoin stronger in future cycles because I think it would survive a recession. And that's probably the biggest FUD for Bitcoin to have to go through is like kind of the argument of like, well, Bitcoin's never survived a recession, like not a real one. And who knows if it would survive. I mean, I think it would survive and it would probably be stronger on the other. So those are my views. And that's how I can sleep well at night. I don't really have altcoins except for maybe some like dust bags from prior cycles. I haven't bought any altcoins in years. I've just been riding the Bitcoin dominance train. I don't really consider Ethereum an altcoin. I kind of consider it to be somewhere. I think I'm probably wrong, and I know the Bitcoin maxi view would be dunking on me. I kind of want to dunk on myself, but I do consider Ethereum to be somewhat in between Bitcoin and then like the altcoin market.
Yeah, like a blue chip.
It's kind of like the index of the altcoin market. Like it's kind of what I think. Like again, if I'm trying to be optimistic, if Ethereum does not survive, how are we not? I mean, how is everyone just not a Bitcoin maxi from that point on?
That's it. Well, that'll lead me to, well, Guy, what do you got for this one? Because I mean, like me and you, I think are more, I mean, we have Bitcoin heavy. I know that, but there's some altcoins there. So what's your portfolio looking like? And any other assets in there? Gold, real estate?
Real estate, yeah.
Equities?
I'm sitting on cash a lot at the moment as well, because for the reasons that sort of Ben outlined. But yeah, in terms of crypto, so I haven't checked today, but sort of, or the last few days actually, but I'd say between 45 and 50% Bitcoin. a fair bit of ETH as well for my sins, and then sort of the next biggest holdings after that are Sol and Sui, and then there's quite a lot of other sort of altcoins in there, all of which are down bigly and painful to look at. So yeah, you know, in a lot of cases, I'm sort of kicking myself a bit for not sort of following Ben down the Bitcoin dominance rabbit hole. But then, you know, like the Bitcoin I've held it for so long. Do you know what I mean? Yeah. It's been there for such a long time that I kind of feel, you know, I've sort of felt a bit more at liberty to go and dabble in the altcoin market. But, you know, like the more I think about it, like, yeah, you know, if the struggles that we're seeing with ETH and the rest of the altcoin market continue, then yeah, like I would consider buying more Bitcoin. Like I'm not really of the opinion that you can own too much Bitcoin, unless you're Michael Saylor and MicroStrategy. They arguably
he needs to leave some for the rest of us.
I know,
exactly. But yeah, I'm heavy Bitcoin, certainly.
Rob, I didn't realize you were. I mean, I also have other assets too. I thought you were just asking us about crypto.
No, I was going with that. But assets, like what else you got? You got gold, silver?
Yeah, gold for sure. I mean, I've been really bullish on gold for like the last 5 years. I think gold's going to keep doing well. I mean, look, and whenever there's drops in the stock market, gold gets hit, but it's probably going to recover to a new all-time high first. I know this is kind of like a different regime than a lot of our generation, I think my generation is used to, because normally gold just does nothing but, you know, go down or go sideways. But for the last several years, and I think for a few more years, we're going to see gold do pretty well. So, and I think silver is going to underperform gold until kind of like, it's the same thing. It's the same principle. Like, I mean, a lot of people think that like this whole Bitcoin bleeding stuff is this like novel idea, but I mean, this stuff has been going on with assets since like the beginning of time. Like silver is likely going to bleed to gold until loose monetary policy occurs, just like it's going to keep bleeding to Bitcoin. And just like you saw like the Russell 2000 bleeding to the stock market or the NASDAQ, right? Higher risk assets get annihilated to low risk assets under conditions like this. And I also own, you know, a low expense ratio index funds. There's actually a correlation that shows you the higher expense ratio, the more the fund underperforms, not because there are not good managers, but the good managers that you can find occasionally, yeah, they make more, but they take what they make for themselves, and you get left with what you would have gotten had you just gone with an index fund that basically had a 0.0% expense ratio. So I think that, you know, all that, I mean, it makes sense to have a diversified portfolio. And I mean, like Rob, I know he's into real estate. I think that's a good long-term investment if you you know, I mean, Rob has the hair, so I just pull my hair out dealing with that kind of stuff. I can't go with the real estate market.
No. Guy has the hair. Guy has the hair for all of us. But I will say, I mean, lastly, that for all these things that we're talking about, it comes down to assets. And everybody who's watching this video, you guys got it right. You guys understand that assets are important, but the majority of people in the entire world, all they do is they work, they collect fiat, whatever that is, and they'll put it in the bank if they have a bank, and they'll watch it just melt away like an ice cube. So it doesn't really, I mean, it matters what assets, but as long as you can get into some really solid assets like we're talking about today, I think it'll be okay. So look, guys, we're coming up on an hour. I think this is pretty good for today. So any other pieces that we missed out, or any words of wisdom before we clock out of here?
I don't have anything.
I saw a great comment from someone asking, when is Into the Cryptoverse going to get turned into a theme park?
That's pretty good.
Ben, I think that's something you've got to think about. Into the Cryptoverse world, you know, they were saying sort of roller coasters, things like that, very appropriate to crypto. So I think they wanted 10% for the idea, though. Just putting that out there.
The rug pull roller coaster.
there we are. We're brainstorming already.
Oh man, I got a new job for Gary. This will be great. Yeah. Anyhow, all right, everybody. So that's it for today. Again, follow Ben and Guy. Also check out that video that he did with Dana. And there's a link in the description for that. But everybody, thanks so much for stopping by. We'll see you next week when we're on Guy's channel. So hang in there. I think you're gonna like where we're going. Adios, everybody.
See ya.